Hello everybody, happy Friday. Hope everybody's having a great day and has had a great week. I kind of wanted to continue our homeowners topic, and last week I had brought up flood insurance, and I kind of wanted to kind of go over that a little bit because it's not something everybody might think about, but depending on where you live and if the bank might say that you need it or something like that, that it's something maybe we should talk about because it's a little different than regular homeowners insurance, the way you purchase it, the things that we think about, some of those things. So I thought I would go over that. So plain and simple, flood insurance is through FEMA, but is also FEMA partners with about 50 different carriers that help them write flood insurance, right? So depending on if you go lucky through FEMA or, we might use another company. We use Assurant, which is American Bankers Life, that writes, any of the flood insurance that I might do. So it just kind of depends. So that's kind of the first step, right? It's not, it's mandated by the government, meaning that they set the zones and things like that, but it might not be directly through FEMA. You might get it through somebody else. And I thought this was interesting in my research. A flood insurance covers your house from a flood, and what they consider a flood is an excess of water on land that is normally dry, affecting two or more acres of land and 2 or more properties. So that is the definition of a flood, right? So water outside that affects your property, whether it's your house or your personal property or something like that. That's and that water again is coming from outside. A flood isn't water necessarily inside like a pipe burst. This is flood groundwater. It was interesting that I also found that is the number one thing. So when we think about like the hurricanes and everything like that FEMA covers, that flooding was the most common thing that was claimed, right? So when we look at that, like from a federal disaster, that flooding was one of the biggest things. So, who is flood insurance for? It is can be purchased by anyone whose community participates in the National Flood Insurance Program. So basically, your community has to partner with the government in steps to help with flooding and do things and stuff like that. There are 24,000 communities, so chances are if you're in a flood zone, your community participates, but that's how they look at it. So basically there's some partnering with the local municipalities and the states to help deter flooding, right? And look at long-term ways that they can prevent and do things like that, right? So so now that we've talked about that and you kind of understand that, and then again, the abridged version of this, how do you know if you're in a flood zone or not? Well, there are basically 2 types of flood zone. One's a moderate, which is a low risk flood zone. So if you were to look it up, and believe it or not, you can go on FEMA's website and you can pull the maps, and the maps are basically shaded different areas and they have different letters and codes that represent that. Anything that is not an A is a moderate risk. So those are B, C, and X, right? The risk of flooding is reduced, and if you were to get a loan, if we were talking about this from a bank, from a mortgage perspective, a bank most likely is not going to make you have any of those loans. A high risk area is anything with an A or a V, and those have a higher risk of flooding, and those would be the ones that a bank might say, hey, you have to get flood insurance, right? So now what happens? So you've looked at a house, or you're getting a loan on a property and you're like, oh, this is in a flood zone. What does that mean? It doesn't necessarily mean it always floods. It just means that there is a probability of flooding, and my percentage might be off a little bit, but I think in the A areas it said that an A zone had a 26% chance of flooding over the length of a 30-year mortgage, right? So that's basically the nuts and the bolts of that, right? Where that number comes from. So how do you purchase it, right? So it used to be before a very complex, long process. In 2021, FEMA started a new rating system, which didn't just go off of your zone and your elevation, right? Basically meaning before, it looked at what in your area was the base flood elevation, right? So a survey happened and they figured out where that base flood was. You then had to go get a certificate from a surveyor. They had to come and survey your property and figure out where your property sits and where your house sits and relative to that base flood elevation, and then that produced your premium. So depending on where you lived in that base flood elevation, it could be really, really expensive, right? In some instances, for less coverage, it could be more, right? So they changed that and now base it off of what we might consider more normal things. The elevation is part of it, but we look at your zone, right? The type of coverage being purchased, right? So how much and things like that. And then the location, the design of your structure, and was it more prone to flooding? Was it not? Over a long period of time, what did that area have? Where before, a lot of that stuff wasn't taken into account. So when we talk about flood insurance, the most that any one person can purchase is $250,000 for their building and $100,000 for their personal property. Usually the bank is only going to ask you for what your loan is, right? And then you'll be able to purchase based off of that. Deductible could be whatever you want, right? Now, as I go back to those factors, it's important to keep those in mind, because if you were going to call me and say, okay, I need to get a quote on this, or hey, can you look this up? Some of the things that are important is, okay, what type of structure do you have? Is it 1 story? Is it 2 story? Is there a basement, and what's in your basement? Because with flood insurance, we have to tell them where your stuff is, right? Or do you have a slab? Do you have a basement? Like all those things, because if we want coverage for stuff in the basement, if there was a flood, we got to tell them that there's stuff in the basement, right? If this was something that was more like, maybe closer to Lake Michigan or something like that, is it on stilts? Is it like all that stuff goes into factor of what, it is, right? We also look at, the age and the things like that, right? When you purchase flood insurance, there's also, and this is important, there's also a waiting period, right? So if you were just going to purchase it normally, there's a 30-day waiting period. If we're doing it for a loan or a closing or something like that, there is no waiting period. We just have to tell them that, and they will issue it on the day that we need it. If you should be remapped, like whether the government has come back and remapped flood zones, you have the opportunity to buy it with a 1-day waiting period if you should have been out of a flood zone and then in, right? So yeah, it is a little bit more complex than we'll call it normal homeowners insurance, because there's a lot more factors that go into it, questions that are asked and things like that. Now, we don't need that elevation certificate, which we did in the past. Depending on your rates, though, the government does give you the opportunity if you want to get one and purchase one. And in the past, I think they were somewhere in the $300 to $500 range to have somebody come out and do an elevation certificate for you. It might save you money long term. Where I've had somebody, we quoted it was $700 a year, and then with an elevation certificate, it was $350 or $400 a year. So